Hello and welcome to ATFX's US PCE Price Index Preview. My name's Nick Twidell, I'm the Chief Market Analyst. I'm going to be running you through some potential trading opportunities on the back of this US inflation data. It's been another rollercoaster week that we've come off the back of, lots of geopolitical concerns, global growth concerns, but some positive light at the end of the tunnel for many, with President Trump pulling back on some of his tariff threat and hopes that we're going to get some deals done which will really pull back on those tariffs. But also let's don't forget that those tariff implementations are still having a negative effect on markets. But this week we've got US jobs, 4 separate ones, including the non-farm payroll at the end of the week, and the key inflation number that the Fed looks at. So they're the twin factors that the Fed looks for when it's making its decisions. And the other part that's going to get very interesting and bring back fundamental data into focus for investors and traders alike is the fact that a lot of these numbers will now be tariff affected, or at least tariff talk affected. And that's what investors are going to be looking at. And that's why it's so important now to really not totally take your eye off the ball with regards to geopolitical updates and tariff updates, but start looking at how the numbers are coming through and how it's really going to affect economies and therefore your trading decisions. So having a look at this data, it is expected to come in a lot lower than last time. Last time we came in at a 0.4% increase. Now it's just 0.1%, which would probably favour President Trump's calls for a rate cut. We know the Fed and Jerome Powell have been fairly stoic in remaining data obsessed. And this is the first big inflation data since we've started to get this influence from tariffs in. So its importance has stepped up probably from the last couple, and therefore it's going to give us a much better trading opportunity. Now, if we get a negative number, expect that to put a lot of pressure on the dollar, expect that to put pressure on the Fed to cut rates. You could see euro go higher, sterling go higher, and I'm going to show you those charts in a minute. Dollar yen come off. If it comes back in around where we were last month at 0.4, that's really going to pull back up on those expectations. We still have sticky inflation in the US, especially if it combines with strong jobs numbers this week. We could see the dollar accelerate. So I'm just going to share my screen now. We're going to go first up to cable, have a look at the daily chart in cable. We'll then look at euro and yen, and then maybe having a little squeeze at dollar Swiss as well. First, as always, if you haven't subscribed to our channel, please feel free to do so, and it will keep you updated on everything and anything that's going on in financial markets, and that's quite a lot at the moment. So here we are. This is a cable chart. As most of you will be aware, if you've been keeping up with us, dollar's been smashed over the last few months, and certainly since the start of this month when we had Liberation Day from Donald Trump. Cable, and this is a familiar theme with most of the majors, is sitting with dollar at its lowest for multi months and multi years in most cases. A weaker dollar perspective this week, and that could come from weaker inflation numbers from the PCE, weaker jobs data, and an uncertainty or greater tariff threat could see the dollar depreciate further. Here we've got a cable. If we are trading, we won't be trading far from this. This is a daily chart, so longer term trades. A weaker dollar perspective from the PCE, if it comes in negative 0.2, it could take off and it would see a very swift move up to 140. And then we start looking for more historical levels, historical, and we're probably targeting these highs that we got all the way back in Q3 and Q2 2021, and we're looking up there around about the 142s. So big trading opportunity. Obviously, the converse side of this, I'll bring the chart back in so we get a little bit better definition. We could see it drop fairly swiftly back into recent ranges. Support would come in around 128.38. That's cable for you. Euro, very similar setup in euro. This is a daily chart as well. We hit fresh multi-year highs, as you can see, just underneath 116 only a few days ago. 115.73 is the high. We're down at 114.15. We are seeing these big moves in the market at the moment. CPI, if it comes in lower than expected, lower than a zero or a negative number, expect this to be challenged, and a break here could take us back easy to the next key cycle level at 120. So big moves are possible off this data, especially if it ties in with the rest of the data that we're seeing. Conversely, again, we'll see a drop back into the range. Support now coming in at 107.69. That's the 200-day moving average. Trendline support now all the way down at 102. But given the moves that we've seen, and it has calmed down recently in all the currencies, given the moves that we've seen, this week could once again prove pivotal, and we could see some big moves for the dollar. Slipping over to dollar yen now, big week for dollar yen. We've got this PCE data coming through and the Bank of Japan the next day. So could get some big moves. These are the levels we're looking at. So a lower print, slightly different story for yen, I would say. Dollar yen, we're still slightly further away from this support line. Support line 140.06, the low 139.86. That would be the target on a weaker number. Stronger number, we're going to be moving, and this is a trend line I just threw in earlier on actually, 145, just south of 146, and then around about 148 for the probably stronger trend line above that. Dollar yen in particular has got the propensity to make those moves. So these numbers could really move it very far, very quickly. Just going to throw in dollar Swiss as well because it's an interesting setup. Once again, just off the recent lows, and these are historical lows. You've got a big break through these lows here. Big moves in dollar Swiss. Swiss, like yen, has been moving on its haven capability, but let's looking at where we're sitting around about 82 cents now. The lows here, 80.40. So big move to get it back down there, but a weaker number, a negative 0.1, a negative 0.2. We'd see real pressure on the Fed to cut rates. This would be challenged, and then it opens the way for an even bigger correction to the downside in dollar Swiss. Conversely, of course, that stronger number, and I do think the risk is with the weaker number due to the trends that we've got. Stronger number would take us back probably into mid-range here, around about 86 cents. So that's pretty much it. Plenty of trading opportunities, but as I said, this data is key now. A lot more interest in it than it has been the last week. We are seeing focus moving from investors and traders back to fundamental data. This could be a key one for you. Thanks for listening. Have a great day and good luck with your trading.